afternoon, everyone, and welcome to our workshop on scale-up financing. Scaling a business comes with unique opportunities and challenges, especially when it comes to secure the right financial strategies to ensure the rapid growth of companies. Today, we will delve into this topic, thanks to the expertise of our experts and our panelists. First of all, we are happy to have with us as a keynote speaker, Gergely Krejci, sorry for the pronunciation, who is Senior Investment Officer at the European Investment Bank. He has spent a number of years taking care of venture debt transactions, empowering businesses to access the funding they need to scale and thrive. And he also took care of very interesting deals in his career on behalf of the European Investment Bank, and he will tell us a bit more in a few instants. Please join me in welcoming Gergely to share valuable insights on this crucial topic. Please.
Thanks, Salvatore. Thanks, everyone. It's a great pleasure to be here. Thanks to the organizers for the kind invitation. So today I would like to talk to you about scale-up financing. But it may be more appropriate to talk about the gap in scale-up financing. As we know from the Draghi report, Europe has been falling a bit behind in competitiveness, and competitiveness is linked very strongly with innovation. If you look at spending on innovation, you will see that Europe hasn't kept pace with the US and even China in recent years. Whereas this is key to maintaining a strong and competitive economy. And as this is an SME conference, I would also like to stress that entrepreneurs play a key role in innovation. We very much rely on them to create new technologies and to scale these technologies to market. So innovation is risky. Investing in innovation is very risky. And guess what? The more innovative something is, the riskier it is, right? So deep tech, biotech, and clean tech companies, they typically require very large capital outlays. They require longer time to scale to market. As a result, these companies, they face a longer and deeper valley of death than a traditional tech startup, but they're very important to our economies. And due to this longer and deeper valley of death, they also require more capital. But by the time a company in Europe becomes 10 years old, it will have only raised half the amount that its peers in San Francisco will. And this is very strongly driven by less developed capital markets in Europe. VC investment in Europe is 6 to 8 times lower than in the US. What's also maybe of particular importance for scale-ups is the number of large-scale VC funds. In Europe, we only have a handful, whereas in the US, there are close to, or there are at least more than 10 times as many of these as in the EU, and in general, capital markets here are fragmented. So this leads to the fact that many scale-ups then rely heavily on foreign investors. More than 80% of the scale-up deals in Europe involved a foreign investor. Over half of the M&A transactions involve a foreign buyer. And a third of EU scale-ups decide to go for an IPO in the US instead of Europe. And also we can mention that many successful US unicorns actually have European founders. Now that I've told you all this bad news, I would also like to focus on some positives. The EU has managed to create some very successful scale-ups. So over the past decade, over 250 scale-ups have been created in the EU. And although this number is maybe not huge, but these companies have been very important to the economy and to the innovation ecosystem. A few examples are listed below. BioNTech, Zealand Pharma, Bolt, we all know, or the Rohlik Group, to name an example from another sector which is known in Hungary under the brand Kifli. These are all companies that have received backing from the EIB, and I would like to zoom in a little bit on the first one, on BioNTech, because that's a transaction where I had the pleasure of working on. So BioNTech is a leading German biotech company today. They were the ones who developed the first COVID vaccine, which was approved in the EU and the US jointly with Pfizer, their partner. The technology actually came from BioNTech. And if we go back in time a bit, in 2020, at that time, this was a company with great potential, but actually no approved product yet. And they managed to rise to the challenge and were extremely quick in developing this vaccine, and then in scaling up the production of the vaccine, which was also required in that situation, in that environment where the pandemic was ongoing, and we were looking for solutions to stop the pandemic. So it's very important, as you can see based on this example, that we continue to support scale-ups in Europe, because we have very, very good, very innovative companies who have the potential to become competitive at global scale, but they need the necessary funding to be able to do so. So this funding gap is to be addressed. There are several reports which came out. Partly the Letter report touches on this, the Draghi report. There was a study that the EIB ran also on the topic. Without going into detail, I think what's common in all of these recent reports is the need to deepen the capital markets, and in order to do so, we need to mobilize private investment. We need to tear down the hurdles that stand in the way of the flow of capital to these sectors. And we all have a role to play here. So the private sector to fund innovation, policymakers obviously to get rid of the barriers that persist, and of course the public sector leveraging public funds to then crowd in private financing are all very important aspects. The EIB group already plays a very important role in financing innovation. The EIF, as part of the EIB group, is the largest public investor in VC funds, and the EIB itself is the largest provider of venture debt in Europe. This is a product that is specifically designed to meet the needs of innovative companies. We've also worked together very closely with the Commission. We're the main implementing partner under InvestEU, and several successful initiatives have been launched addressing the scale-up gap. One such example is the European Tech Champions initiative. But I can tell you that obviously financing scale-ups is very high on the agenda, and we are we believe that we're well positioned, and we're very keen to play a leading role in closing this scale-up gap. So I would like to thank you for your attention, and I would like to hand over to the panelists for a very exciting discussion on the topic. Thank you.
Thanks a lot, Gergely, for your valuable insights. I'm sure that some of the points that you raised in the presentation will also, let's say, attract the attention, and also will generate comments from the audience and also from the panelists. But before introducing the panelists, I forgot to mention something very important. That means the possibility to address questions to the whole panelists via Slido. Yes, indeed. So feel free, don't be shy. Submit your questions to any of the persons. So then, after the rounds of questions, we will try to have some time for the discussion. But let's introduce now our panelists. I will then start with Istvan Szabo, who is CEO of Garantica, who is an organization which provides guarantees for loans for SMEs, and who covered different high-level positions in banking and export finance. Welcome. Then we have Richard Weg, who is the CEO of the Budapest Stock Exchange. He is also sits in the board of the Federation of European Securities Exchanges Board. And in the past, he covered important positions in the Hungarian Central Bank, and he has lots of experience also in the listing of high-growth companies. Welcome, Richard.
Thank you.
Unfortunately, Caroline Weber cannot be with us today, but has been replaced by our distinguished expert, Luc van Stinkiste. Sorry, that's, I try to manage. Who has been working 40 years in the same company and 20 years as a CEO at Recticel, right?
That's true.
And has also been president of the Belgian, president of the Federation of Belgian Enterprises, and has also been sitting in the boards of many companies, mostly listed. Welcome, Luc. So I would then start with the question from Istvan.
Yes.
It could be the first question. So after the presentation of Gergely, so first of all, if you have any any conclusions, or if you want to comment, if you have anything that you would like to comment on his presentation, and then how do you see the current landscape of scale-up financing evolving in the EU, and namely also in Hungary? And then what type of trends should company be aware of?
Yeah, thank you very much. First of all, as for the presentation, I think it really said it all. So we've seen the gap, we've seen the, we're lagging behind compared to US, and I think that gives a very detailed explanation for some of the things that we see on the market. Now, as for the scale-up financing landscape, I think within EU and in Hungary, it is evolving rapidly. And obviously, there's an increasing focus on diversification of funding sources, and it is something that needs to be done. For the time being, traditional bank lending remains vital, and I mean, in terms of percentages, that is still a very large portion of it. But we do see a growing role for various other financing types like venture capital, private equity, and other innovative financing tools such as green bonds and crowdfunding. Now, in Hungary in particular, state and various EU-backed financial instruments, such as interest-subsidized loans and guarantee schemes that mostly we provide, they are the ones, they have a significant role in filling the funding gap for the SMEs. And as it looks today, it will remain like that for the near future. Now, trends, you asked about trends. One trend that companies should certainly watch is that there's a growing emphasis on, and again, it's the right place to say it, on sustainability and digital transition. Now, why is that? Obviously, because investors and lenders, they're also prioritizing businesses that are aligned with ESG principles, and also many EU funding programs, right, specifically target green and other tech-enabled projects. Now, one more trend, or another trend, which should be closely watched, is the integration of AI and fintech solutions into the lending process, which will obviously or hopefully improve access to finance, and it will also streamline the risk assessment process, and will ensure that there's a faster time to yes and time to money on the market. So for the companies, what I would say that the takeaway is pretty clear. First, embrace transparency, because transparency is obviously a must-have if you want to take financing, various types of financing. Also, embrace innovation and embrace sustainability, because these things are here to stay.
Thanks a lot.
Thank you.
Thanks a lot. So, Luc, as we heard from Istvan, something that might resonate, to you, ESG, transparency. What specific regulatory challenges to scale up, to do scale-ups, face when transitioning then from private funding to the public markets, and how can regulators ease this process? I think that can also build on your own experience.
Well, of course, when a non-quoted company wants to go to financing for his scale-up, he has different options. But we all know that in Europe, for the moment, 30% only is financed through capital markets and 60% is financed through banks, which is something that is quite the opposite in the United States, which shows a little bit the difficulty of the European companies to get to the market that is more taking risk. That's the capital market versus the one of the banks, which is banks are not a caritative institution. They have to get their money back. So now, I remember that in the past when a company was raising money for going to capital markets from scratch, so not a company that was on a pre-market, it costed them in average about 10% for raising 50 million euro. You had to pay 5 million to consultants and all kinds of people that learned you how to behave the correct way. Today, you could say that many companies have already improved in that kind of financing reporting on an easier way, which makes it a little bit better. But on the other side, we have made new regulations on top of this that are not solved. When we talk about MAR, we talk about the prospectuses or the multiple voting systems. We still have not, after many years of discussion, a harmonized and simple way of handling those problems. So the burden has not decreased, so I think the 10% is still applicable today. But on top of that comes, for me, and I am on the board of EFRAC, of the SRB, I'm not telling anything that I shouldn't tell, but that is confidential, but I can tell you very easily that on ESG, the burden is quite impressive for companies. So if smaller companies have to respond to ESG the way it is now in the picture, I think they will have it extremely difficult to do that. So the risk is that they do not go that way, but they try to go in another way. And I adore the EIB impact and effort they do on helping companies that are smaller to scale up. But I don't think that this is applicable to all the companies. So many companies will not probably be in line with the demands of the EIB as it is today. So we need other resources. And in my own country, Belgium, they launched a study and published it yesterday, where they mentioned that for the 11 million inhabitants that is Belgium, with a good economy, it's true, a lot of small and medium enterprises, because of ESG, there will be a demand for now until 2030, so that for the next 6 years to come, of 38 billion euro investment in getting in line with the regulations and in responding to the needs of innovation and changing the whole company, because ESG is touching the soul of the company and it's putting in question the whole strategy of the company in some cases. So it's a very complicated and a very impactful demand. So in this sense, I think we will have to be very careful with what we do in that respect. And I think it's the role of Europe to be, how must I say it, to help us in making those ESG standards more reasonable. Because today the standards have a set of data requirements that are far beyond the only needs of the financing methodology that will be followed by the companies. It's going in the line of demands of many other people, NGOs, academics, people from the unions, and many of those demands are not of valid. Even the double materiality system of the ESG are not really necessary for an investor to make a judgment on the company. So could we come down a little bit in the next years to come, certainly with the pressure of the American new economical behavior, to be more reasonable? Maybe transition is a solution, or maybe simple slowdown of the demands. So that's my comments.
So very interesting food for thoughts for policymakers, what you said. Richard, instead, so we heard, the bank-centric system in Europe, but of course, you work in public capital markets. So the question for you is how institutions, organizations like the Budapest Stock Exchange can support scale-up companies in accessing public capital markets. And in particular, why should these companies seek market financing instead of traditional banking financing?
Thank you very much, and good afternoon to everyone. I thought that maybe I will show you what we are doing in terms of SMEs, mid-sized companies. Just before that, to give you a hint of who we are. So we are a relatively smaller market in a European scale, but in the region, in our region, Central and Eastern European region, we are the second most liquid stock exchange after Poland, or the third one if you count Vienna Stock Exchange as well as part of the region. It's always debatable whether they are in the central or in the western part of Europe. But after that, so we have a handful of listed issuers with several billions of market cap, but a large part of the companies that are listed on the market are actually mid-caps or small caps. So therefore, this part of the economy, this part of companies are very important for the stock exchange in Hungary, but also I think for the whole economy is very important. So I promised to show you what we are doing. So actually we are building a strong community of the best companies in Hungary. We publish every year such a publication. It's called B850, Stock Exchange 50 Companies. These are among the 50 most successful Hungarian companies. They are not listed companies yet. They are private companies. And we started to do it 9 years ago. So now we have 9 such publications. It means that we have 450 of the best Hungarian companies, private companies around us in a business community. So after we do this publication, we invite them to a free of charge mentor program that is operated by the stock exchange. So we give them education about what are the advantages of becoming listed companies, how they can start to use the public capital markets, either in terms of equities or in bonds. And we do this mentor program together with the market participants, with banks, brokerage firm, consultancy firm, auditors, and so on. So, of course, it's not just the stock exchange that operates that mentor program. And we have some good results that after entering this mentor program, a number of companies decided either to become bond issuer companies or becoming publicly listed companies on the equity market. We have more than 50 of these companies, these 450 companies that already started to use the capital markets. And there is a number of other companies that started to dig deep together with banks and brokerage firms into this process. So we have in a process of building up the pipeline for the future years to have more and more mid-cap companies. Actually, we are not the only one who is doing this in the region. I think all of the exchanges in the region are doing similar initiatives, educating companies, having the SME growth markets for them to have a specific listing venue for them to list. And we have in the region more than 200 companies listed on different SME growth market venues. We had in the recent years 25 SMEs listing on the SME growth market, and we had to raise capital with that. These are relatively small tickets, so the average size of a capital increase for an SME that is listed on the growth market is only around 3 million euros. So it's relatively small amount of capital that they increase, but they can use this capital and leverage it through the banking sector to really give a boost to their own company story.
Thanks a lot. So, importance of mentoring as company measures that can help companies, to better tackle the listing. And as you might infer, I'm not such an expert in moderating panels, since I forgot to introduce one of the speakers, but I'm going to do that now. And it's my pleasure and honor to introduce José Julián Izquierdo Pérez, who is advisor in the business development department at the UIPO, the European Union Intellectual Property Office, who has an extensive experience on intellectual property and on its linkages with IP finance, on access to finance. And I would immediately address a question concerning IP and access to finance, and in particular on how IP strategies can strengthen financing opportunities for scale-up companies, especially in securing investor confidence for long-term growth. Please, José Union.
Gracias, Salvatore. First of all, thank you very much, Commission and Presidency, for inviting all of us, and in particular our agency. Michelle and myself, we're pleased to be with you. Salvatore asked us to be a bit provocative today, so let's try a bit from my side. How many of you, raise your hands, no slide though, just raise your hand. How many of you, when I say IP, you're thinking about Internet Protocol? Only one? Good, that's good news. So the majority of you, when I say IP, you're thinking about intellectual property. Those are very good news, very good news. Now, whether you are SME or not, whether you are a facilitator, whether you are a policymaker in this room, the aim of my reply is to tell you a story which is a successful story, but a successful story that needs to repeat every single day. Let's start with the beginning. IP, intellectual property, is made to protect innovation, intangible assets. We, the organization that Richard and myself will represent, are in the market to serve those agents that really believe in protecting IP as a means of, for example, obtaining financial support to their activities. We have a number of actions. One of it is research work in Alicante, where we are based. Research work shows, Salvatore, that IP strategies do pay off. So that's the starting of the script. Commissioner designate Séjourné some days ago in his hearing said, and I quote, "Startups employing patents and trademarks are 10 times more likely to obtain venture capital." End of the quote. That's actually a quote coming from one of the research works of our organization together with the European Patents Office. Now, that's good news if you are in the business of providing support or in the receiving end. But let's see now the not so good news that I have to bring. IP, again, not Internet Protocol, but intellectual property, is very much unused among the SME community. We could do a Slido, but I will do it fast. Only 10% of SMEs declare that they have registered or intended to register their IP assets. 10% within the market, within the single market. More research. 1/3 of those declare they achieve a financial gain. More research work. And this is a sort of a premiere, so stay tuned for tomorrow. We did a research together with Invest Europe, and within the period of 2007 and 2023, out of the 800 billion euros spent in risk capital, venture capital, with 56,000 companies in the European market, 20% of that amount went to companies having at least one patent. But 40% of that amount went to companies having at least one trademark. If you are SME, I'm sure you have a brand, you have a name, you have an asset that has a value, and that corroborates this research. Now, more news from that research. Venture stage companies with trademarks attracted 50% more funding from the industry, from the VC industry, than those companies not having such asset. At the buyout stage, that percentage of attraction grew up to 68%. Now, conclusion of the story. IP, again, intellectual property, not Internet Protocol, when used, and whether you are a scale-up or you are a starting immature company, you pay off if you use it, and you can leverage on it. And that's the end of the story for the time being. Salvatore.
Thanks a lot, and thanks for your interesting perspective that complements what the others said. So let's go for the second round of questions. I would like to ask you a bit more synthetic, so that's to leave some time also for the questions. So please try to be as synthetic as short as possible. First, Isvan. After talking about after this first round, if you can let us know what do you think are the sectors or the industry that would that you believe have the highest potential for scale-up success, and especially if you can also refer to your knowledge and your experience in the Hungarian market.
Yeah, in our opinion, I mean, based on what we see on the market, we believe that the sectors that are most scalable or most open for scale-up financing are clean energy, fintech, agri-tech, and advanced manufacturing. Now, on the clean energy, it's obvious that the green transition is creating unprecedented opportunities for renewable energy companies and for those companies that are innovating in the field of energy efficiency. Now, as for the others, Hungary has a very solid, very strong industrial base, and that positions advanced manufacturing and robotics companies for future growth. And also in terms of agriculture, there's a rapid digitalization going on, and that does create further room for agri-tech businesses to thrive in Hungary. Now, what do we as Garantika do about that? We are proactively supporting these industries through targeted guarantee schemes, such as the recently introduced, and I think someone already said it, the InvestEU. Yeah, who said InvestEU? Someone said InvestEU. So we did recently introduce an InvestEU guarantee scheme that is, as we speak, it is picking up on the market. So that's one of the tools how we foster these things. And also, our clients, or natural clients, are actually not the SMEs, but the banks. And as we partner up and team up with banks, we do work on individual programs with these partner banks that basically address these questions. Thank you.
Thanks a lot. Question for Luke. How do you see the ecosystem, investors, workers, regulatory entities, services provider performing? Do you see any challenges that might be perceived as a barrier for SME growth?
First of all, I have nothing against regulators, if you want me to say that. I think we have to accept that regulators by definition exist, and second, that they are maybe in that Europe is not uniform. So I think a regulator in a Central European environment with a lot of small companies has to be a little bit more flexible than the one that is in England, for example, to say something. But for me, this is not real a battle between them and the companies. My real concern is about what they will do now when they will translate the delegated act on ESG into the country law. And there I demand that they will do it harmonized all over Europe, so that there is no gold plating because the system is already very heavy, and that there is also no reduction from one country to another, so that multinationals are not confronted again with different regulations in many. But my other real concern is the following, that is related to auditors and large companies. And you are surprised maybe, but maybe this is a provocation. We have a problem in relation to what the ESG is asking and how the auditors are in a learning school as much as the preparers are. They are also learning for the moment how to apply. But I see that they have a tendency to overreact and to ask almost immediately the companies. First of all, they have different interpretations, even the same auditor on the same companies. I mean, from one country to another, has another interpretation of what the text that we made is asking for. And second, they are pushing into the concept of immediately reaching reasonable assurance, not limited assurance. And I think that is going much too far, because the small companies certainly cannot do more than limited assurance, because they have no know-how and no knowledge about all those questions that are popping up in the ESG requirements. And second, when you talk about the value chain, then the companies there are completely lost. And so we will have to accept, and the European Commission has to take a responsibility in that limited assurance for most of the companies, or for the companies that decide that that is for them the only way to report correctly, is an accepted system for a certain period of time. And I plead for something like 5 years for smaller companies that before they have to go to reasonable assurance, because that means a lot of things. The second problem is the large companies. The large companies have a tendency to impose their demand in the value chain on a relatively brutal way to the small companies. If you do not report what I ask you to report, I will kick you out. You are not my supplier anymore. I don't need you anymore. You have a company in China, you have no data. We have examples of that, which is something that is not admissible. So I think there is the real problem. We have, again, to convince Europe to take a difficult step. I know Europe is not an institution that is in favor of transition, but we have to have a rule that allows companies to say, hey, I am on the way off. I have talked with my auditor. I convinced him that I did every effort possible, but today I do not have the information. And in that respect also, we have to respect the sensitive information for companies, for smaller companies, more than for larger companies. In the IROs, that means the impact, risk and opportunities that are the data requirements of the ESG, we ask companies to talk about their risk, and we also to talk about their business plans to improve it, how they want to do it, their OPEX and their CAPEX. I still do not understand why we ask the OPEX, but okay, it's in the system. Please, the companies will only talk about their risk. They will not talk, the small ones, about their opportunities, because otherwise they disclose to their competitors in the market what they are trying to innovate and do. So they will not do it. So please, Europe, take your responsibility and streamline this in a system in which companies can not hide behind to do nothing, but protect them against push from companies asking too much.
Thanks. I will take this invitation and convey to the colleagues then. Richard, question for you. Then concerning the SME growth markets, so how do you see those markets, playing a role in providing a more accessible, let's say, route, for scale-ups, to access capital markets, and whether you see the Listing Act playing any role in this, so providing new energy, new boost for this segment?
Yeah, definitely. I think the SME growth market concept, together with all the services that are provided by the ecosystem and the market participants, I think it's proved that this concept is working. I think even in Hungary and elsewhere we have fantastic companies on these platforms, and they are able to tap into the investors' money and raise capital in order to finance their future growth. I think Listing Act will have a lot of advantages, and streamlining the regulation, the administrative burden. So some streamlining of the prospectus regulation, I think, is definitely a very, very good way forward. And I think companies will realize it when all these changes will take into force. However, I think we have some topics which needs to be considered as obstacles in attracting even more companies to these markets. So one is the lack of capital that is following small and medium-sized companies in Europe. I think definitely in the SME growth markets, the fact that these are smaller companies is limiting the number of professional investors that are looking at such companies. So I think some kind of government or EU initiative in order to tackle this kind of market failure is definitely necessary. We talked previously before about the EU IPO fund and so on, but I think the direction is very good, but I think we need much more of such initiatives. So to have anchor investors in such deals by smaller issuers is definitely an area where some policy intervention is probably necessary. And the second one probably is helping these companies to finance the costs of becoming listed companies. We had previously an initiative that we financed partly from EU money the cost of becoming a listed company, and this was a very, very successful program. So it really boosted the number of companies that were interested in becoming a listed company. So I think such initiatives could be very useful tools. And if we are talking about savings and investment union, for that we need investors, but we also need more issuers. So I think helping them to become listed companies is, I think, should be a good tool.
So, very interesting point of view. And let's see then what will be the impact of the EU Listing Act on the SME growth market then. Last question then for you, Jose Julian. If you can share some insights on how EU initiatives are helping companies protecting and monetizing the IP as they scale up and seek public or private funding.
This question, for which I thank you, Salvatore, goes to the core of our next 5-year strategic program that actually was adopted this morning. Our organization intends to provide, with the means that it has, a number of support actions to different stakeholders. Let me enumerate a number of them. One, in the area of identifying the value of IP in order to use it as a mean of leveraging finance or eventually to exploit the asset as such, we intend to seek partnership with different financial actors and the policymakers in order to understand how we can bring into the normal dialogue of business people the need to protect IP because it has a value. There's a missing narrative, there's a missing dialogue in the European level dialogue is seen. So we want to bridge the gap, the policy gap, the research gap, the raising awareness gap with the different actors in order to put a tag, a value to your IP so you can eventually go to your bank, you can go into your VC round and give a number, but also a strategy behind. Remember, IP strategies pay off. That's the main priority that at least we are going to support. Number two, we're going to continue being operational. And I want to give you 2 examples. The first one is easy. As a service provider, we're going to make sure that your assets continue to be protected at the European level, as other offices, et cetera, et cetera. But that's the easy part. The more difficult part is to continue attracting the interest of SMEs to protect the assets with financial support. You may not know, but since the year 2022, our organization, thanks to the European Commission, has been put more than 40 million euros into financial assistance to SMEs to protect their IP activities. More than 56,000 SMEs have benefited from this support. We intend to continue it as a second priority. And a third priority, if I bring the dialogue to a much more macro level, is how are we going to make sure that in June 2025, in the new single market strategy, we place in the right corner, at least a corner, maybe the right level, but a corner will do it, IP as a tool for innovators, for SMEs, for making all those efforts that my colleagues are referring to more realistic, thanks to IP. IP is an unknown factor that we have to put in the right level of political dialogue, and we intend to support the Commission in the next 5 years in that dialogue.
Thanks a lot. So we are now just the time for a few questions that I just submitted through Slido. Let me just point out to the first one. Draghi points at the absence of large pension funds in Europe, so something that we were referring to, the lack of institutional investment as drivers of institutional investment in the US. However, this requires deep reforms in member states' pension system, today mostly in government hands, through a pay-as-you-go scheme, so basically unfunded type of schemes. What can we do? Does anyone from the panel that would like to reply on this point?
Maybe just to
Even
reinforce.
the EIB can also, yeah, please.
Just to reinforce the question that we studied all the successful capital market development stories in the world, and one of the finding is that local institutional money and a strong pension system is one of the pillars of the capital market development story. If you look at Sweden or other Nordic countries or South Korea, not to mention the US, where if you look at OECD data, close to 70% of the pension assets are in US pension funds. So it's not a surprise that the valuations are much better there and the capital markets are really strong. How to solve this topic, maybe it's not
Yes, this is more a matter of member states, let's say, member states level. I don't know whether anyone else wants to add something on this.
No, I think just maybe we need to focus on what's realistic and what's not. Obviously, this is a topic, that would require deep changes, as someone pointed out. Europe is different from the US in many respects. The pension system is one key difference. I think we need to focus on what's possible and mobilizing the funds that are there to be mobilized. I think that would already give a certain boost. But obviously we won't. It's probably not a realistic expectation to get to the same level as the United States, where everything is organized based on a different logic.
Yeah, maybe instruments that also ensures some forms of protection to institutional investors, like Escalar in the case of the EIF products. That's something that can also provide a good support in this. Then there's one directly addressed to the EIB. The EIB supports green energy, but its 20 million funding threshold excludes many innovative small and medium-sized projects. How can the EU and the EIB adjust their financial tools to better support smaller scale initiatives, driving the green transition and meeting sustainability goals?
So I'll take that. I'll take that one addressed to me. So I think here, what we try to do at the EIB is to finance along the entire value chain, and obviously there are different products that are applicable at different points in time, and usually venture that comes into the picture at a point in time where the company has already raised a substantial amount of equity. So usually for companies requiring a lower level of funding, probably the EIC is a better tool. They can invest smaller tickets as equity, and then as the company develops, it will hopefully get to the point where where this venture debt investment instrument becomes interesting, and the right point in time comes for that.
Yeah, let me just add that also within the EIB group, there's also the EIF that through intermediate finance can also serve the needs of smaller companies. There's also a specific products that is targeting sustainability, which is called the Sustainability Guarantee. Is a new product that is specifically targeting, let's say, companies. Let's say, is a product inspired by the EU taxonomy on sustainable finance. So it's a new product. It is a rollout, stage that can be also of interest, for the growth of companies. We have just the last few minutes. I would ask you to be super synthetic, like a flash, on looking ahead. What do you think are the key priorities for supporting financing and scale up of companies over the next 5 years? Just a flash, each one. I will start then from Jose.
If in the US 58% of startups have at least one patent and only 40% in Europe, there's a gap we have to bridge.
Thanks a lot.
I agree with him. I don't have anything to add. I think all has been said. Sorry.
Richard?
We need more capital markets, and not only focusing on the private side, but on the public capital markets, because it's also weak, not only the private one.
We need more capital markets.
What I can add is what we're going to focus on in the next 5 years. It's going to be certainly innovation of financial products to include to respond to all the new financial solutions. Also, we'll focus on sustainability. We want to realign the portfolio that we have in order to meet the sustainability goals, and also accessibility gaps. We'll look for gaps if there are still any, and we'll address them.
Thanks a lot. And then I would ask you then, Gergely, to draw a bit the conclusion of the overall session, please.
Yes. So thanks everyone. This was very exciting. It was a very exciting discussion. I think it's a very relevant topic. I've tried to make some notes during the discussion, and some themes that came up maybe repeatedly were sustainability, digital transition. These are challenges that companies are faced with. But also, from Istvan's comment, I took it that actually these are also opportunities, right? Because clean tech companies focusing on digitalization or advanced manufacturing, which also improves competitiveness, this is also an opportunity for many companies. I noted that IP is very important, and also it's very important to give advice to companies, also in terms of IP, but also in terms of capital markets and how they can become more efficient. And I also noted that going beyond the difficulties in raising capital, companies are also faced with often very heavy regulatory burden, which is especially true for smaller companies. So that's something that maybe would be worthwhile to look into, how that can be alleviated a little bit. And I think it's through the combination of many steps that we can improve really the access to finance and help to close the scale-up gap in Europe.
Thanks a lot. Thanks a lot for the conclusion. So basically, we are at the conclusion of this workshop. Let me just, join me for a round of applause, for the panelists, for the nice discussion. And I have last communication for you that's following the closing of the session. This room, there will be the European Small and Mid-Cap Awards ceremony. This is a ceremony. It is aiming at awarding EU companies recently listed in EU stock exchanges that had pretty remarkable performances in terms of innovation, growth, internationalization. So please stay here. You are all invited, to join us in the ceremony. Welcome. Bye-bye.